Boom. Hey, everybody. Thanks so much for tuning in to Young Money Investments. My name is Cameron Benyon, and today is Stock Pick Sunday one more time. So today's Stock Pick Sunday is going to be a little bit of a combination of my long picks, companies that I see a lot of long-term value in, as well as a couple swing trades that I also see some potential value in the short term as well. With the market and kind of the way things have been going this past week, my account has just been getting hammered. Like, let's be real. These past few days, I was up massively, massively, massively in Tesla after a perfect play last weekend, right before I was going on the cruise and everything. I learned a very valuable lesson, though, in that, and that is you need to learn to cover profits. I say this to you guys every single time, and this was a perfect example of an $11,000 profit minimum that I had on just one account. And on that account, that $11,000 was wiped off the table, completely wiped off the table because I did not cover profits. And so today we're going to talk a little bit about that. We're going to talk about, like I said, my five top swing trades not five top swing trades, my five top long-term positions that are a fabulous, fabulous, fabulous buy right now. I love them. I really, right now with the market, this is something I've always been really good at, and that is buying into companies when I see a value or a good opportunity, a good buying opportunity. The market needs these ebbs and flows, and with this correction that we're going through right now is all a part of the market, the nature of it. This needs to happen, but this is the best time to buy, and this is a time when a lot of new investors or even some experienced investors get a little scared, they get a little shaky, they hear all these bad news and these bad reports. But I'm here to say that the GDP rates are growing tremendously. Unemployment rates are still very low. The economy is looking so good. This is just a time for the rich to get richer. And why not let yourself get richer? Why not use this as a buying opportunity? Have set stop losses in place that in case this is a large pullback, you get out and you take a small loss. But in the long run, this is a great time to buy. And so that's what I want to get into and jump into right now on today's Young Money Investments. Let's hit it. All right, so today we are going to be talking about my very first position that I see a lot of long-term value in. This is a company that I see a lot of tremendous long-term value in, and that is going to be Facebook. We've talked a lot about Facebook for several weeks. I mean, I'm always talking about Facebook because of this large pullback that it's had. It was consolidating and starting to come up, but it's recently trended down. Facebook is a company that you just cannot really bet against in the long term. Short term, yeah, they're struggling right now, but a lot of companies are. Amazon is down massively as well this week. Google is down massively this week. All these multi-billion-dollar corporations are down a lot of money, and this is why I see Tesla being a great buying opportunity. Let's look at the fundamentals of Tesla, or not Tesla. Gosh, the fundamentals of Facebook right now. And let's kind of talk about why I see it as a good long-term investment in terms of why I see this as a great buy right now. So if you are looking at here, we're looking at the TD Ameritrade Thinkorswim platform right here. Hopefully you can still see me or whatever over there. If you're looking at the Facebook chart here, you can see it has an ascending uptrend pattern. This is something that we love. We love buying into companies with an ascending uptrend pattern, right? Obviously, over the past few months or so, we've seen a lot of issues as Facebook has come up and down, and it's been having some issues lately. This is where I see a lot of value, though. If you look at some of these support patterns here, this dating all the way back to actually March. There was a pullback back in late March, when it reached $150 a share. I am seeing a lot of support and consolidation through this line right here. Now, this is what I would do if I was getting into Facebook, and I'm in Facebook right now, actually pretty substantially. I would take another position as you are right here in this high $150 price range, the high 150s. If you're looking to get in there and you're looking to average in, I would put in half of my money into Facebook right now. And then I would wait to see if it does have any pullback down here to the 150 point. I don't see it doing that. I do see like I've been talking about, RSI is pretty low. It's at a 36 right now. It's finding support right here from what I've seen. As we've seen in previous times, it shows a lot of consolidation through this support right here at about 157. I like Facebook. I really do think this company has a lot of long-term value, a lot of long-term potential. And I plan on holding this company for several years. I think in the long run, even the short term, you have a lot of good buying opportunity because of the fact that if you're able to ride Facebook up, even if you were to buy right in here at let's be real, you buy here at like 157.50, you ride it up, right here to this first line of resistance, you're looking at about an 8 to 8.5, let's call it an 8% return on your investment. So you invest $10,000, you get a return of approximately like $700 and some odd dollars. So great little return there on, no, I take that back. Yeah, it's $800. It's about an $800 return. Well, $10,000, 8%, yeah. Yeah, it's pretty nice, somewhere in that range. So my math is really bad right now. It's a Sunday, you know how it goes. Facebook, I just really like this. This is a very safe play. This is probably the safest play that I have out of any of my long-term positions that I'm talking about today. So that is why that is my number one choice. All right, so for the number two choice, this is going to be a company that, again, I had purchased and bought into this a while back. I wrote it up, took my profits and gains, and it has come back down to a level that I see a lot of value in. Now, this particular company is called Cirrus Logic. Now, the ticker symbol is CRUS. Cirrus Logic makes a lot of the audio chips for iPhones, for Apple. Audio is the way of the future. Hey, SIRI, will you do this? Hey, Alexa, will you do that? Hey, faucet, turn on. Audio is the way of the future, and that is going to be the way a lot of these home automation devices end up working. Cirrus Logic, with the economy and everything the way it is going right now, has had a tremendous sell-off, and this is why I love buying into Cirrus Logic at this price point. So if we do take a look at the screen here, you are going to be able to see the 180-day chart on Cirrus Logic. Now, it is having a massive pullback right to this price point of approximately about $36.11-ish. You can see that there has been a lot of consolidation on Cirrus Logic. You can see where this is a large, major level of resistance previously, and now is a level of support. As you can see, you can draw a nice little line through here to kind of match up with that. You can see where it was a level of resistance for a while back. Now you're looking at it through here as a nice level of support for Cirrus Logic. Now, if it does break, it's going to break quite a bit. So make sure and have a stop loss set in place if you want to mitigate your risk on this. But buying right here at this $36 price point is money, because I can totally see this running up and being able to get back into at least this price range in the short time. And that is a nice 23 to 25% return on your investment. Now, I see this company, like I said, in the coming years, you can swing trade this all you want, but I see this company as a long-term, very valuable company that could easily top 70, if not go to $100 a share. Now, with that is going to be a massive increase. I mean, you're looking at, if it gets back to its highs of where it was previously, you're looking at about a 98, almost 100% return. So you double your investment basically in Cirrus Logic. I like the price point for new investors because at that $36 range, you can afford to buy a few shares, but it's not going to break your bank. And so this is a position and a play that I really do see a lot of value in. If you're looking at the RSI, it is so overextended. or sorry, under, it's like completely tanked down here at a 27 RSI. That is a nice, even like I said, a nice little swing trade or even a day trade. That's what I would look for if I'm day trading a stock, is an RSI down here. So Cirrus Logic, big, nice little long-term play that I could see, even if you want to swing it. The fundamentals, or sorry, the technicals on that is looking money right now. All right, third company we are going to talk about today is a company that is a Chinese company. I have talked about this company quite a bit. It is a company that is valued at roughly about $500 billion market cap right now. If it was an American company, this is probably a company that would be close to $1 trillion market cap. This company is Alibaba. Now, Alibaba is a company that I have obviously traded and been in and out of quite a bit. This is a company right now that at this price point, being that it's trading at about $154 right now, anywhere between there to $150 is a sweet buy. And not too long ago, it was trading at over $211 a share. The return on that is roughly 26%. And let's actually take a look a little bit more at the, let's see here. Let's take a look a little bit more at the technicals on Alibaba. This is a company that I think, because of the trade war rumors and things like that, it has really taken kind of a big hit. On top of that, you couple that with the market pullback that we're experiencing right now, it is in a nice double bottom that I see a lot of value in. So let's take a look really quick right here, and we are going to see Alibaba. So as you can see, Alibaba right here, it is consolidating down here. If we take a look at the smaller chart pattern, you can see this large consolidation down here at this 152, 153 price point. It's currently trading at 154.63. If you can buy anywhere between there down to the $150 price point, I see this as a large buying point. As you can see down here as well, it has found support through here previously. This is all the way back in July of 2017, so a little bit over about a year and a quarter ago. I see this being a great long-term play. I see Alibaba in the coming years being worth a ton of money. With this market pullback, you're buying in at a great price point. RSI is definitely nice and low at about 35. Again, I can't say enough good things about Alibaba and this company as a nice long-term play. Even in a nice swing trade, this isn't a bad option. Although I do think this might be a longer swing if you're looking to swing it. If you're looking to get in this, I would go with it as a long-term and plan on it being a long-term hold. Now, this next one is going to be a company that I normally, based on technicals and based on the PE, would not want to buy into, but because of the fact that it is this specific company, and because of the fact that the market has pulled back so much, this is a great swing trade, but it's also a great long-term hold, because unfortunately, although Amazon is so highly overvalued, it is a company that is doing everything right now. So let's look at Amazon really quick, and let me go into the reasons why I think Amazon is a spectacular buy currently. Amazon is a company that I've been in for quite some time. I've been in and out of it. I've been holding it through this dip. I was in it for a while and was up a pretty sizable amount. I've given back most of my profits on it, but I'm looking to actually add to my position here. So if you look at Amazon, you're going to notice that recently, obviously with the market, the downturn in the market, if you look at this just over the past 180 days though, this is the crazy thing. 180-day chart on this. I don't think I can do it from there. 180-day chart, you got to look at how much value it has increased. I mean, it has increased, oh, I think I need to just do it like this. It has increased, oh my gosh, let's see here. Increased approximately, oh, is this the 3-year? This is the 3-year chart. Let me look at this really quick. 180-day. Here's the 180-day chart. I don't know why I had it on the years, on all that year chart there. But if you're looking at the 180-day, I mean, even on the 180-day chart here, you're looking at a gain of about 57%. So Amazon has been just on fire this year, as it's been over the past few years. Amazon, though, is finding support down here at this roughly 1870 price point. Now, Amazon, what I'm looking to do is buying into this, and I most likely will swing it because of my largest position that I'm in, which we have not talked about yet. But Amazon I see is a great buy. As you can see, it has touched this area multiple times. Right here, we had some consolidation. It couldn't break it, came back down. Finally was able to break it, came back, used it as support, touched, and then ran up. It's coming back down. It has not wanted to get back down to this price point for quite some time, as you can see, but being able to even ride it from here all the way up to its previous highs, or all-time highs, you're looking at about a 9% return. So Amazon offers quite a bit of return on top of the fact that its its RSI is down here at a 29. That is dismal for this company. It is a great buy right now, and that is why I plan on adding more shares of Amazon to my portfolio here on Monday. So currently I have a $20,000 position and then plan on making that just a little bit bigger. So Amazon, I really do, like I said, this is another safe bet. I mean, in terms of like quick, I feel like I don't want to call it easy money, but it's just the RSI is so low. The fact that it's finding support where it's found support multiple times before, I really like this buying opportunity. And the fact that everyone's just fearful in this market, buy while people are fearful and sell while people are happy. I think this is a great time to buy into Amazon right now. All right, so we are going to talk about my big boy position. This is the position that I have put the most money I've ever put into any stock. Probably one of the craziest decisions I've ever done. Probably nothing that I would ever recommend doing. This is a company that I've talked about a lot. And I've talked about it in all my videos, pretty much, right? And this is Tesla. Tesla is a company that you probably saw my massive gain that I had last week right before I left on vacation. I learned that valuable lesson that I should have sold, but I have also learned that it is time for me to make some big profits. That's my goal, right? And we're going to look at why I am so heavily invested into Tesla right now. So if we take a look at Tesla really quick, we're going to pull up here on the screen, and you are going to see the past 180 days on Tesla, right? For being a multi-billion-dollar company, this is probably the craziest company. And obviously it's because of Elon Musk. It's a lot to do with Elon Musk and a lot of the short sellers. As you remember, I bought this nice little dip and had rode this thing up for a nice 18% return. Unfortunately, I did not sell though, and I was an idiot, and I should have sold in that $300 price range, but I didn't. But the one thing I am doing now is that as this company has continued to come down, and continue to consolidate, is I am buying, and I am buying a whole heck of a lot of Tesla right now. This is a risky play. Obviously, Tesla is not a safe bet like Amazon and like Facebook is. It is risky because of what's going on with Elon. The financials, they're not a profitable company. That is risky as well. But in terms of long-term investments, I don't know how you could bet against Tesla. There's a lot of people that do, and I might get, some people on there that are going to give me a whole bunch of reasons why they want to go short against Tesla or why they don't think it's a good long-term investment. I'll tell you what, I really don't care. I mean, I'm doing this, and I'm going to give you my opinion on it. Buying right here at that 260 price point is a great buying opportunity. Now, if you can buy in right here and even buy it in anywhere down to the 250 price point, you are buying Tesla for a steal of a deal. I mean, you buy that in there and you're able to ride it up here, you're looking at about a 34% return. I'm probably averaging right here at about 270, I want to say. So I am down. I'm down in my position a decent amount. I'm down 5 figures, actually, low fives, low fives. But nevertheless, down 5 figures. I mean, you do 13%, even up to that $300 price point. I'm going to be sitting pretty, and I'm very excited for what is to come with Tesla. And based on the fundamentals, I mean, it has consistently touched right here. If it were to break this, it would break pretty hard, and I definitely would be on the hook. But overall, I mean, any buying from 150 or 250 to 260 is a great buying opportunity for Tesla. And I do plan on, I can't really say I plan on adding more shares because let's just say I have a lot. I have a lot of shares in Tesla right now. So that is my kind of my call outs and everything for this week. I'm going to throw in one more play. And that is going to be NVIDIA in terms of a nice little swing. I love where it's topping out down right in this area at that 267 price point. If you can buy in right here and sell on the highs, you're looking at about a nice 8 to 9% return. NVIDIA seems to be pretty safe and solid based on the technicals and everything. RSI is looking nice at a 32 right here. I really do like this play as well if you're looking for a nice little swing trade. So NVDA, that is another good one. I know this video has been a little bit longer. I don't always like to make long videos, but you know, there's so many buying opportunities in the market right now. And I just want to reassure everyone out there, have mental stop losses in place. Do not just willy-nilly, you know, oh, I'm going to throw my money in and, you know, I'm for sure the market's going to go up. We can't say that. We can't say that in the market. But what we can say with assurance is that based on previous patterns, it is looking like it should reverse, and you should be able to turn a considerable profit off of this downturn. So I have definitely went hardcore on buying into these. This is how I made a lot of my money before I started making videos, before I really got into active trading. The times I would do the best in the market was because I would save up, and maybe there were 2 or 3 times a year where there would be really great buying opportunities. And that's when I would flood my money into the market. This is the time that I would have done that. My younger self would have. And obviously my current self, that's what I'm doing as well, although I trade a little bit more. So thank you so much for tuning into Young Money Investments. If you have any questions, hit me up in the comment section. Please don't forget to subscribe, hit that bell notification. I would love to hear from you guys. I'm excited that my subscriber base is growing. I want to make more videos. I will be better now that I'm back from the Bahamas and Miami, which was so beautiful. Thanks so much for tuning in, and I will talk to y'all later. Bye.